Welcome back, everyone. A final part of the special edition of Business Incorporated. Let's reintroduce you to my panel in case you're just joining us. Johnson Chukwu, who is the CEO at Carry Asset Management, Ayode Jiebro, the CEO at Afrinvest Securities, and of course, Bitel Dunaye, who is also the Chief Executive Officer at Eagle Global Markets. Gentlemen, thank you very much. A very special monetary policy decision day. And we're looking at the economic tea leaves for the MPC members. We will scratch that a little bit. But again, the central bank chief says last week there will be tight monetary policy moving forward. That signals what to expect 2 o'clock today. Bitter.
I'm expecting it to be more of the same. I'm not expecting there to be much of a change from the last meeting. And the major reason is we've not seen any significant change apart from the fact that we've had a new election. So I'm expecting nothing particularly exciting or nothing particularly different. I think it would be wait and see.
Would there be anything in the IODG, in the communique that could give us some signaling from the policy as to the way forward in terms of votes by the members or what?
Yeah, if it's in terms of votes, for most of the policy members would currently, based on before the inauguration, they would expect that they need to watch and see how things pan out. But beyond that, I would be expecting that in terms of maybe there will be a discussion around the differentiated cash reserve requirement that was introduced last year. How much of it has banks taken advantage of? There are some companies that have taken advantage of that, to where banks lend at single-digit rates to some of the A-rated companies. These are some of those initiatives that may also drive growth. It may be slow, but if it's consistent, rather than have the money sit with the CBN, banks can structure credit around it. However, that risk still remains very elevated. So we balance it between the risk as well as the potential return that may come from it. But by and large, don't expect any major shift or major policy, key policy rates would be retained at current levels.
Johnson, in terms of we keep holding the rate, but again, it's a matter of risk and return. So when we say risk and return, who benefits, who takes the carrot and who takes the stick? I'm going back to that.
Well, if you look at who takes the benefits of keeping the rates at current levels,
yes,
you say those who are investing in fixed income instruments. We've seen a rate of 14% for the past 30 months or thereabouts. And we've seen inflation rate drop from 18.72% in January 2017 to just 11.31%. We're now seeing a positive real return on the, investment in fixed income instruments. So those who are holding fixed income instruments are actually getting a positive real return on their investment. That's also why they are seeing a lot of foreign investors really bidding for Nigerian fixed income, local currency fixed income instruments. Because one, beyond the fact that you expect the exchange rate to remain stable for the next couple of months, because one, oil price is quite relatively strong, and we've seen an elevated level of our reserve, and we also know the CBN governor's policy position as relates to the exchange rate. So foreign investors are cautious of that, so they're taking advantage of the fact that, look, even when you match the local inflation rate against the return on fixed income instrument, you have a positive yield. So for those, if you look at those who are benefiting from current rate of interest rates, I think particularly you have to look at those who are investing in fixed income instruments. The equity market has unfortunately suffered from one, elevated interest rate, and two, the fact that we have not seen any moderation in risk in the environment, despite improved return by corporate quoted companies, corporate entities that are quoted on the exchange. We've seen reasonable level of return from some of the, particularly those in the financial service industry. We've also seen improved benefit announcements, but we've not seen that reflected in prices of equities or the market index.
So, Ayodeji, so what is biting investors' appetite? What keeps it at a very lukewarm level on custom straight?
Yeah, I think it's the environment, business environment, and like he mentioned, despite improved earnings for most investors, the foreign investors, when you look at the analysis in the last 1 month, we've had more outflow on a net basis, about 55 billion when you look at the FPI report published by the NSC last week. It means a lot of foreign investors were pulling out. But based on also what we got to understand, some foreign investors, in terms of their projection, had maybe their candidate in terms of projection based on, for some, that are pro-private sector. And so based on that, they had to reduce their exposure. And saying that they are a stable market, risk-free market, you moved funds from equities to fixed income. And you know the way Nigerian market is structured, foreign participation been very significant, been over 50%. So once you see that for most foreign investors are shying away from the market, you see that prices would also dip. And for the most local investors, especially the PFAs currently, are not willing to take that risk when they see foreign investors pulling out.
So when you look at both the fixed and equity income market, in terms of, yes, so this is fixed income. The folks overseas or those who they're taking, the government borrows the money, so that benefits the government in one way, even though it's a debt. But if you look at equities, equities is the one that benefits the people, as it were, isn't it? Yeah. Because government doesn't take that. You're trading the shares. So when we have equity market that is lackluster on this prolonged basis, with a few silver lining occasionally, that means we're not really running the equity market as what you call the home of capitalism. That's what it is all over the world.
Well, I'm sure people could point at a number of things, and obviously the fixed income market would be one of those things, because it's less risk and a decent return. So there's no reason why I would go risk.
But if you look around the world, the stock market is where most people love to be. The risks are there, but the returns are also there.
But we've seen growth in global markets. We've seen fundamental growth in global markets across the globe. We're pretty much where we are in the equity market where we were 4 years ago, just after the election or just before the election, meaning that we've not seen any growth. In addition to that, I think we've not completely recovered from the so-called recession which we did experience, the uncertainties around the price of oil, for example. You know, if it continues, we're at 60 now. If it continues, maybe that would give a bit more confidence to investors. Considering that a fundamental part of our market, as Ayodeji mentioned, is foreign portfolio, foreign capital, there's absolutely no reason for them to take the risk.
On the equity space.
Exactly. Take the risk on the equity space, especially when we're seeing what we're seeing in fixed income. Now that we've also had, I mean, a number of them, I do know, we're waiting on the sidelines, waiting to see what happens with our elections, waiting to see if there would be uncertainty. And also, there might have been a number that would have hoped that we got a different president, a pro-business president. We don't know. So we're hoping. And as we all do know, hope is definitely not a strategy. But the reality is, in the current climate... Okay.
Just a second there. Let's get across to just have a feeling. We're counting 2:30 is the closing time on our market, but it's just about a minute before we take a break. Let's get Temple Ashaju, our business correspondent, here from the stock exchange, Nigerian Stock Exchange in downtown Lagos. Temple, live from the trading floor. Give us a sense of where the trading day has been for, give us about 1 minute of that before we take a break.
So it's basically flat at this point. Earlier it was just totally flat, 0.00%. But then a few seconds ago, we saw a bit of decline in the consumer goods segment of the market. Nigerian breweries lost some 3.60%. This PZ also lost almost 3%. And all of this then impacted on the indices of the markets, bringing it down to some 0.02%. So generally, market is flat at this point in time. But we've seen some huge volume compared to what we saw about this time yesterday. Generally, I think a lot of investors are just waiting for the outcome of the MPC, even though we know that it doesn't stop them from either buying or selling in the market, given the kind of sentiment that's been playing out here in the market, both.
Okay, Temple, we'll get back to you at about 2:30 for an expanded view on today's trading day. Thank you very much. Everyone, let's wrap up this special edition of Business Incorporated. Thank you, gentlemen. Stick around. We have a longer conversation after this, as well as the briefing by the Central Bank Governor, Godwin Emefiele, at the top of the hour. Thank you very much for watching, everyone, and I'll see you again.